Good day, everyone. Um, Welcome to Capital F Heston Academy. In our previous class, we talked about support and resistance, and today now we want to elaborate from where we stopped. So the other day we talked about how to mark it as from daily time frame, and we talked a little about 4 hours time frame. Now the little explanation is just for you to understand how to join multiple time frames to mark out your entry zone. You understand? So let's continue from where we stopped. So after marking out, you can see from the previous video, you can see how the market respected the zone. So now you can now expand your chart to now see the market clearly. You have already known what you are looking for on a higher time frame. Remember that BTC have not broken above this $111,000 area. You understand? So now that means anything that will break above this level, the BTC will be making a new high. So what we are looking for now is BTC going to break it or not? So now, after analyzing with what we have done, we are now going down to 2 hours time frame. On 2 hours time frame, we will be checking how the market reacted on that zone. So on 2 hours time frame, if you look at it very well, you can see that, oh, this high is higher than this high, and this high is higher than this high, and this high is kind of respecting to this high, even though this market is trying to break it. But what if the market is coming to make a double high? You understand? So what I will do as a trader is, first you need to, okay, let's mark out the trend of the high. We'll use a trend line, then we'll mark out how the market has been respecting that high. Now you can see now the market now is kind of making a downtrend. Then let's look at the other side, the down part, to see if the market is breaking a bearish structure. So remember what I told you in the previous class, that if the market is kind of confusing, the chart is kind of clustered together, you can change it to a trend line so that you can filter out the liquidity zones or all those wicks that is there. Now if you look at it now clearly, you can see that, oh, there is a break of structure at this zone. If you look at it, you can see that the market actually broke a structure at this zone. There is a break of structure at this zone. The market broke a structure at that zone, and that is what will make us make it BOS. BOS means a break of structure. Now let me explain how break of structure works. Remember I told us in the previous video how markets break a support and resistance. If it breaks a support zone, it will turn the support zone to a resistance zone. But mind you, in our next class, follow up so that you'll be able to mark out that it's not all the time that the market retests the exact break of structure. Sometimes it kind of clear liquidity. So you have to do some. There is a way we identify if there is a possibility of clearing liquidity. Now, this break of structure to the downside shows that if BTC mistakenly respects this resistance zone we are looking at, then we might have a high possibility of retracing to this daily time frame zone. This is the daily time frame support zone. That is it. So this was a fake breakout and it broke a structure. Now this is not a break of structure. For those of you that do not know, this market made an equal level at this zone, and after it went upside and now came down to break a structure. Now after this break of structure, there is one thing that the market will do. You will ask yourself, where did the market start the movement before the break of structure? The actual movement, some people will tell you, is this place. No, this is an inducement. And like I have always told you guys, an inducement is an area where the market kind of show you a sign that the market will reverse from, while it will not reverse from there. It's clear people out from there. In people that did economics or did accounting or did business admin, they will tell you that inducement is kind of um, um, should I say, advising someone to purchase what he didn't aim for. So let's assume you want to buy an iPhone and you get to a store and the person does not have actually iPhone 16 Pro Max. Then the person now advises you to buy Samsung, the latest Samsung. You understand? Now you buying Samsung, he will tell you everything good about the Samsung, that is better than iPhone, is this, is that. just for him to sell it to you. Then if you purchase it, anything that happens is on your own. So that is exactly what the market is doing. So the market left this other block, this level here, showing that, oh, I rejected this level, so that you can jump in. So a lot of people are in the market currently. Then what you might see is that the market might come up to this zone, even try as fast as clearing this liquidity. Remember, in our previous class, I told us that when you are entering a trade, if you take a trade here, your stop loss should be above. If you are selling, your stop loss should be above the previous high. This is the previous high, so this zone. So now, the reason your stop loss should be above it is that sometimes this market comes to clear liquidity. That is exactly what I'm teaching you. Is because of, you might not even, you might think that this place is an inducement. Nobody can predict exactly that this is an inducement, but looking at the chart very well, before the market broke this structure, this is where the movement started. This market here did not actually reach to the supposed level that is supposed to hit, so it now reversed, and as it reversed, it respected a zone. This zone it's respected was a selling zone. If let me put it on a candlestick, you can see it respected this zone, a selling zone. That means we still hold on. The market did not complete its movement. We still hold on this level to be where the momentum or the reversal started. So that means for this market now, if the market break this level, if the market break this level we are looking at now. So now let me explain something. This is what started this movement and made this high. Yes. Then the market came back and broke the level, the place that started this movement. So breaking it is a break of structure. Now that place, this one started this movement. Then if this market come back and break it, now is also a break of structure, but we are not going to call it a break of structure. We are going to call it a change of character. Now, how do you know the place to tag exchange of character? If a market break these two structures at the same time, two opposite structures at the same time, the second one it is breaking, it is a change of character, telling you that, oh, this structure is no more valid, that I'm focusing on this. So this market broke this structure is signaling that BTC will go back and sell. But if you come back and break this structure, it shows that, oh, I am no more going in this direction, I'll be going in the other way direction, which is a buy. So now you understand why people are waiting to sell it here, placing their stop loss above, or people, this area is area for yourself, because they know that if the market mistakenly break above here, then they will just close their sell and jump into buy. But you don't just jump into buy, depends on your money. You understand? So I believe we have already understand how this market works. This is a trend line, as I've always said, indicating that the market is making a low low, a low high, low low, low high, low low, low high, low low. Then we expect a low high on this trend line, maybe a clear of liquidity, then come back to make a low low. Now you understand how the break of structure works. So in the next class, we'll be looking deeply into some psychologies. You understand? Follow up so that you can understand some psychologies, because how we teach is that every strategy has some things, some manipulations that happen. Remember, most of all these strategies are made by the market makers. They already know it. What they are learning it. Now, I always tell people that this is a war between the smartest people and average people. You and I, we are the average people. The smartest people is not just that they are over smart, but they have the money. Remember, that is the money that is moving the market. If you are trading against someone that has over $1 billion in a market, you are just wasting your time, because even if he can click enter the market anyhow. A small peep is okay for him. Just a 2 tick or 3 tick is making times 2 of the money you have. So that means we need to be extremely smart for us to outsmart them. It is hard to outsmart them. So trading is not just something you come out, jump into it because you know support and resistance. No, there is a lot of things, and those things you think you know, they also know it. So where you want to place your resistance, your stop loss, they know. Where you want to place your take profit, they know. So when the market is coming to your entry, they will buy it. They will not leave the market. They will buy it more. so that you hit your stop loss, then they will close, then sell. That is what they do sometimes. So that is why I always tell my student that I will teach you. The purpose of me explaining everything in detail is for you to catch up and develop yourself. No, okay, develop your own strategy that suits you, that people does not know. Maybe the way you look at the markets from one angle to another is different from the appropriate way. You understand? That is it. Please follow us up for more videos.